Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. Several subscribers asked me to analyze Adobe stock to see if it's a great stock for the long term. I invested in Adobe stock almost 2 years ago because I realized Adobe has an outstanding subscription-based software as a service business for creative professionals. You may ask these questions: is Adobe stock a great growth stock? Is it a buy now or should you wait? What is Adobe's long-term growth prospect? What are the risks? And what is Adobe's fair intrinsic value per share? In this video, I will answer these questions by covering these topics. First, what is Adobe's business model? Second, what is Adobe's long-term growth prospect? Third, what are Adobe's competition and risk? Fourth, what is Adobe's stock's fair intrinsic value per share? Fifth, what I will be doing going forward. If you like this video, make sure to smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and portfolio videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a VIP patron. You will be able to follow all the stocks I'm buying for the long term. Also, you will be able to download the latest intrinsic value calculators for all the stocks I'm analyzing, so you will know when a stock is currently overvalued, fairly valued, or undervalued. The link is in the video description. Take a look, let's start. Before investing in any stocks, I believe it's important to understand the business and understand how it earns its revenue and net profit. Adobe is one of the largest software as a service companies in the world. The company specializes in creating creative apps and services for creative professionals such as photographers, graphic designers, video editors, artists, content creators, developers, and marketers. Adobe's most well-known apps include Photoshop, Lightroom, Illustrator, InDesign, Premiere Pro, and Acrobat PDF Reader. It also has many other apps for creative professionals and artists listed here. Adobe created the PDF format, which is one of the most popular document formats we often use on our computers and mobile phones. As of now, Adobe earns most of its revenues from subscriptions. If you want to use Adobe's paid apps, you can either pay a subscription fee to use individual apps such as Photoshop, or you can pay a bundle subscription fee and subscribe to the Creative Cloud. This lets you use all of Adobe's creative apps. Typically, you will pay $53 per month to use Adobe's Creative Cloud service. Adobe also earns subscription revenues from document cloud apps such as Acrobat Pro PDF Editor and from Experience Cloud services such as this marketing, customer data, and commerce analytics services here. Adobe reports all its revenues in 3 business segments: digital media, digital experience, and publishing and advertising. If you look at this here, you can see Adobe earns most of its subscription revenues from digital media, which is consisting of Creative Cloud and cloud document services I mentioned earlier, and from digital experience applications. For example, in the recent Q2 quarter, digital media generated 73% of total revenues, and digital experience generated 24% of total revenues. If you want to invest in a great business, you want to find a business that generates very consistent free cash flow growth each quarter. Adobe is a software as a service business that does not require too much capital to maintain and grow its business. This means it has very little capital expenditure or CAPEX each quarter. Now, depending on the industry, the best businesses often have small capital expenditures compared with their operating cash flow. They often have consistent free cash flow growth almost every quarter. For example, if you look at Adobe's Q2 quarterly report here, you can see Adobe generated an operating cash flow of $1.988 billion, up from last year's $1.184 billion in the same period. Its capital expenditure was only $95 million, which is much smaller than its operating cash flow of $1.988 billion in the same period. This means Adobe does not require a lot of capital to maintain and grow its business. It generates a lot of free cash flow each quarter. If you look at Adobe's income statement here, you can see it has a high operating margin each quarter. For example, it had a 36.7% operating margin in the recent Q2 2021 quarter. If you look at Morningstar here, you can see Adobe has been generating very consistent revenue growth, net income growth, and earnings per share growth for the past 3 years. Adobe's free cash flow growth has also been very consistent for the past 3 years. In terms of outlook, for the upcoming Q3 2021 quarter, Adobe's management expects that Adobe's digital media revenue will grow 22% year over year. Digital experience revenue will grow 21% year over year, and digital experience subscription revenue will grow 25% year over year. When we're investing in stocks, we have to look at the business future prospects instead of the past. So let's talk about Adobe's long-term growth prospects. I believe Adobe's Creative Cloud is its most important long-term growth catalyst because it generates the most subscription revenues for Adobe. This is from the recent quarterly report. It tells you how Adobe increases its Creative Cloud's customer base and subscription revenues by first offering free or low-cost Adobe apps we can find on desktop computers or Apple iOS Store or Android Play Store. Then Adobe offers additional paid features to convert new users to the subscription-based Creative Cloud service. We offer Creative Cloud for individuals, students, teams, and enterprises. We expect Creative Cloud will drive sustained long-term revenue growth through a continued expansion of our customer base by acquiring new users as a result of low cost of entry and delivery of additional features and value to Creative Cloud, as well as keeping existing customers current on our latest release. We have also built out a marketplace for Creative Cloud subscribers to enable the delivery and purchase of stock content in our Adobe Stock service. Overall, our strategy with Creative Cloud is designed to enable us to increase our revenue with users, attract more new customers, and grow our recurring and predictable revenue stream that is recognized rapidly. This is based on my experience using Adobe apps and its Creative Cloud service. As a content creator, I realized Adobe's Creative Cloud and apps have a huge competitive advantage over other competitors because most creative professionals are already using Photoshop or other popular Adobe apps such as Premiere Pro, Illustrator, and Lightroom. Adobe apps, in my opinion, are well integrated within Creative Cloud. For example, if you're a content creator, it's very easy for you to edit your photos using Adobe Lightroom and Photoshop. Then you can move files between different Adobe apps. You can use Adobe Premiere Pro to edit videos and buy royalty-free assets from Adobe Stock. I believe all these apps integrations within Creative Cloud give Adobe a large competitive advantage over other competitors. Also, if you use many Adobe apps instead of subscribing to each app individually, which will cost you a lot of money, you can subscribe to Adobe Creative Cloud for $53 per month. This allows you to access all of Adobe's desktop and mobile apps for designing image and graphics, editing videos, and developing creative content. I mentioned this earlier. Adobe created the PDF format, which is one of the most popular document formats we often use on our mobile phones and personal computers. Because Adobe created the PDF format, PDF is often associated with Adobe's Acrobat Reader. This gives Adobe another huge competitive advantage because it locks many creative professionals into the Adobe Creative Cloud ecosystem. For example, if you want to read a PDF file on your phone or on your computer, you will likely be using Adobe's free Acrobat Reader to view your PDF file. Adobe Acrobat is the most popular PDF reader, but if you want to edit your PDF files and convert them to other formats, you have to subscribe to Creative Cloud or Acrobat Pro here, or you have to buy other PDF editor apps from other companies. I believe Adobe's second long-term growth catalyst is introducing new apps and services for creative professionals. As of now, Adobe is expanding to 3D design applications and new media types such as screen design, prototyping, 3D, virtual reality, and augmented reality. If you look at Adobe's subscription plans here, you can see these 3D and AR applications are separated from the Creative Cloud bundle. Personally, I believe there is a huge market for 3D design, virtual and augmented reality applications in the upcoming years because virtual reality and augmented reality applications are becoming more popular. In addition to developing new apps and services in-house, Adobe acquires other platforms from time to time. This allows Adobe to include new platforms in its Creative Cloud offering for individuals and businesses and in its digital experience offering for enterprise customers. For example, Adobe is acquiring Frame.io for $1.3 billion cash in Video Push. Frame.io is a popular cloud-based video editing collaboration platform. Frame.io will become a part of Adobe's Creative Cloud offering. According to Bloomberg, Adobe wanted to buy New York-based Frame.io after it realized that its customers were using it with Adobe's suite of products. Adobe considered building its own tools to make it easier for teams to edit videos together, but ultimately decided to buy Frame.io instead. I believe Adobe's third growth catalyst is increasing annualized recurring revenue, ARR. If you want to estimate Adobe's revenue growth, you will need to look at Adobe's annualized recurring revenue (ARR) every quarter. It indicates Adobe's revenue growth over the next 12 months. Adobe's higher annualized recurring revenue suggests it's adding new customers and its customer base is increasing every quarter. This is from the recent Q2 quarterly report. Creative ARR exiting the second quarter of fiscal 2021 was $9.53 billion, up from $8.78 billion at the end of fiscal 2020. Document Cloud ARR exiting the second quarter of fiscal 2021 was $1.68 billion, up from $1.47 billion at the end of fiscal 2020. Total digital media ARR grew to $11.21 billion at the end of second quarter of fiscal 2021, up from $10.26 billion at the end of fiscal 2020. Adobe also buys back shares almost every quarter. If you look at this here, you can see Adobe's diluted shares outstanding have been decreasing almost every quarter. This is great for existing shareholders because we can expect Adobe's earnings per share should continue to increase over time as long as Adobe's subscription revenues continue to grow. Let's talk about Adobe's biggest risk. I believe Adobe's biggest risk is competition. There are many alternative creative apps out there that let users edit photos, edit videos, design graphics, develop 3D content, and create many other creative contents. For example, if you look at this article here, you can see there are many alternatives to Adobe's most popular Photoshop app that lets you edit image. You can use apps such as Affinity Photo, Procreate, Photopea, and GIMP. If you're looking for alternatives to Adobe's Premiere Pro that lets you edit videos, there are many other competing apps such as DaVinci Resolve, Final Cut Pro, and Pinnacle Studio. If you're a creative professional, you can often find other creative apps that are free to use or that are cheaper than Adobe's apps. For example, I use LumaFusion for video editing that is much cheaper than Adobe's Premiere Pro. I only need to pay a one-time fee for LumaFusion while you have to pay a subscription fee for Adobe's apps. However, if you use many Adobe apps such as Photoshop, Premiere Pro, Illustrator, and Acrobat Pro DC, it's much cheaper to subscribe to Adobe's Creative Cloud for $53 per month instead of subscribing to Adobe apps individually. I mentioned this earlier, I believe Adobe's Creative Cloud is its biggest competitive advantage. Many creative professionals use Adobe's Creative Cloud because Adobe's apps tend to have the most features, have a large community of users, and are well integrated with each other. Let's talk about Adobe's fair intrinsic value per share. First, I define Adobe's intrinsic value as its future cash flows discounted to the present day. We're using Adobe's free cash flow growth to estimate its fair intrinsic value because Adobe has a very stable subscription business that generates very consistent free cash flow each quarter. These are the key assumptions. The discount rate is 7.3%. This is the cost of equity calculated by Finbox.com. I estimate Adobe's free cash flow will grow at a compound annual growth rate (CAGR) between 15% and 25% over the next 5 years. To calculate the terminal value at the end of year 5, we're using both the perpetual growth model and the exit multiple model. Then we take the average of both models to calculate the terminal value. Let's go over each case scenario, the worst case, the normal case, and the best case scenarios. So we will know if Adobe is currently overvalued, fairly valued, or undervalued. Under the worst case scenario, we're using a compound annual growth rate CAGR of 15%. If we forecast Adobe's free cash flow to the next 5 years and discount the free cash flow to the present day, then Adobe's intrinsic value should be around $242.2 billion for the entire company. And if we divide this by the shares outstanding, then its intrinsic value should be around $508.39 per share. Under the normal case scenario, we're using a compound annual growth rate of 20%. If we forecast Adobe's free cash flow to the next 5 years and discount the free cash flow to the present day, then Adobe's intrinsic value should be around $295.87 billion for the entire company. And if we divide this by the shares outstanding, then its intrinsic value should be around $621.05 per share. Under the best case scenario, we're using a compound annual growth rate of 25%. If we forecast Adobe's free cash flow to the next 5 years and discount the free cash flow to the present day, then Adobe's intrinsic value should be around $358.94 billion for the entire company. And if we divide this by the shares outstanding, then its intrinsic value should be around $753.43 per share. Personally, under the normal case scenario, I believe Adobe's fair intrinsic value is around $621.05 per share or $295.87 billion for the whole company. This means Adobe stock is slightly overvalued at the time of making this video. So what will I be doing going forward? As of now, I already have Adobe shares. I bought the shares almost 2 years ago. My plan is to buy more Adobe shares when the stock drops below its fair intrinsic value because I like Adobe's creative cloud business. I like to invest in great businesses when the stock price is fairly valued or better undervalued. If Adobe's free cash flow grows at a compound annual growth rate of 20% over the next 5 years, I believe its fair intrinsic value is around $621.05 per share, or $295.87 billion for the whole company. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. Make sure you always do your research first and do your extra due diligence before investing in anything. If you like this video, smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and portfolio videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a VIP Patreon member. You'll be able to follow all the stocks I'm buying for the long term. Also, you'll be able to download the latest intrinsic value calculators for all the stocks I'm analyzing, so you will know when a stock is currently overvalued, fairly valued, or undervalued. Thank you for watching this video. This is Victor from the Intelligent Investor channel, and I will see you in my next video.